Hey, how's it going? Good morning. I'm going to get a little technical on here in a little bit, so let's get the easy stuff done with here. Rates continue to improve slowly and incrementally. By the time you're watching this, we may have had a reversal, but for now, a little bit better. With no discount, the 30-year fixed conventional conforming is at about 6.875. FHA, VA, USDA all slightly improved from last week with no discount. One change here, the highlights, my VA, I can now go down to a 550 credit score, and we're still having a $1.5 million loan amount cap on that. So $1.5 million property, no down payment, no mortgage insurance, great rates. The bottom here is where the interest only investment property is at that we talked about last week. This is the one where if you're putting 20 to 25% down on a non owner occupied property, up to 4 units, up to a 4 unit complex there, the rate right now, interest only, is 7.875%, but that's an interest only payment. You're not paying the principal portion for the first 10 years. So the cool thing about that is when you calculate that out, bottom right, the payment on this thing, it's an investment property. The payment on it is equal to having a 6.875% rate because you're not paying the principal and interest. So what if that was a real loan? It'd be like 6.875. So the benefit here is that you're able to purchase in a high rate environment an investment property at a great price, and the payment, bottom right, is equal to the rate we have right now for a principal and interest owner occupied loan. So this is just wild. And I really am trying to do as many of these as I can because we can refinance if somebody bought something at 8.5% and it's paying principal and interest inside the payment. We can refinance them down. This should be something you're talking about to people who think that it's the rates are too high to do an investment property. You can buy the rates down. These are my 1% discount rates. There's really not a lot of benefit there. I won't belabor time on that. Here's the news now. Unemployment is spiking a little bit in Washington for various reasons. Look at all the houses that are for sale up there. Also, the restaurant industry is projecting a worse than expected first quarter. Both of these things are exactly a couple of the primary drivers in these inflation reports that have the industry thinking that mortgage rates should remain high. Let's not invest in that piece. Fed officials, number two, are saying let's hold off on the Fed rate cuts for a while until we're sure that inflation is at bay and firmly in a chokehold. But these two top points right here are exactly what we need for mortgage rates to continue to improve. Increased unemployment, less consumer spending, and the Fed not making a move because the last couple of times they've done that, we've had an inverse reaction in the area of mortgage rates. Point three, if there is a Ukraine war settlement that's going to stop a lot of government spending, whether it is sending cash or sending weapons over, it's going to stabilize Europe a lot more. And there's just a lot of good things going on here with these three main points. Hopefully they all happen. We'll see, right? Bottom one is something internally. I've been talking about getting financing for a 5 unit complex, a 6, 7, up to 20 units, kind of an apartment style building. That lending has been paused by all of our lending partners. And I think it's because the way those loans are performing. It might come back in some form. I don't have it right now. If I have someone looking for it, I'll try to help you find it. Let's talk a little bit about a new investor cash flow loan. This is one that does not require any income proof, no pay stubs, no W 2s, no tax returns. And I'm not going to go through this line by line here, but just kind of read with me here. No income or employment info is needed. Qualification is based solely on the subject's rent versus how much is the payment for the loan you're going to get for it. Okay. So loan amounts up to 3 million, as little as 20% down. You can use this as a refinance tool, but point four here is the key. DSCR stands for debt service coverage ratio. Think about that. Debt service, that's a house payment. Coverage, are we making that back with the rents or not? And the ratio is just dividing them by each other, right? So point four, You divide the gross rents for that income property, the gross monthly rents, by the full monthly payment, right? And then if your answer is 1.15 or above, you get the best terms. If the answer is 1, still pretty good for having no income proof going on, but basically you divide the rents. This thing rents out at $4,000 a month. Well, the PITI payment is $4,000 per month. Boom, we got a deal. And if it comes close, we have other options too. But I want to think in broad strokes right now. Uh, these are just some qualification pieces. I'll go over more deeply next week. Point B here, if it's like an Airbnb, it's going to be an Airbnb or a VRBO property. Uh, we can use 100% of the 12-month average of income if it has already been a rental, or 90% of AirDNA. But if the property is vacant, the appraiser says this is what this thing should rent for. We can use all of that. We're typically stuck with 75% of it. It's a great loan program here that I'm still learning a little bit about. I wanted to get it in front of you because we need to have opportunities. I want you to fill your toolbox, you know. Gift funds are permitted. You can own quite a few financed properties. A lot of loan programs say you can't have more than 4 mortgages out there for you to work with us. They don't care. Uh, Great rates on these too. I've been pricing these out. So this is all good news. Try to balance losing some of the multi-unit stuff with some of the other investment property stuff this week. But this is available. We'll lunch and learn about it soon. Rates are slowly improving. Hopefully, as you're watching this, that's still true. But I will see you today for the blood drive. Thank you.